had a buyer reach out to me and say, hey, what do you think about this house? And I looked at it and I was like, oh, I used to live in this neighborhood. So it happened to be next door of one of my friends. So I called him and I said, hey, you got your neighbors selling their house? And he said, yeah, moving to Ohio. And he said, yeah, but on the other side of me, they're selling their house too. And I was like, really? And he was like, yeah. And 3 doors down, they're getting ready to list their house too. All 3 of these listings are coming on in a span of a week. Now, what makes this wild is this neighborhood, the entire neighborhood, last year only sold 2 houses. There were only 2 transactions in this neighborhood, and now there are 2 under contract and 3 coming online in the next week. This dynamic, I believe, is playing out all over the US. It's people that waited a year, and I'm going to show you why in the data, right? Because people on Twitter, I posted this on Twitter, they're like,
oh yeah, 2 houses, that's enough to see a trend.
Really? I mean, do you really think that that's why I posted that? Maybe what this is a microcosm of what's happening everywhere. At least that's what the data suggests. In fact, if we look at the data, we can see that inventory is growing and we are 25% more homes on the market than a year ago. Now, Mike Simonson from Altos will tell you that it is down for the week and it's down versus last year, but this is more of a holiday issue. I believe that this week, because that's what I'm seeing, is for this next week. And we're already starting to see it here in Nashville. We can see Greater Nashville active listings 5675 up versus last year 5249. And look at it expand. It's growing rapidly, guys. When we look at contract volume is basically flat. Now, these are both interesting stats. But again, what I was talking about was a house that, believe it or not, is in a much more interest rate sensitive part of the market, under 700,000. Look at the contract volume for under 700,000. Okay. The blue was 2022. The red was 2023. The green is 2024. Okay. Now this is just for Davis and Williamson single family homes. But the point is we've been year over year negative 3 years in a row. This may be the answer to our home values really increasing. We are seeing a hot market. Yes, I'm going to get to that in a minute. Well, this certainly suggests that mix is a big part of it. In other words, the median price is going up simply because more expensive homes are selling, not because home values are going up. All right. So mix is a big part of why we're seeing that median price go up. When we look at the active listings for under 700 though, this, which by the way, guys, this is counter to every other price band. This is not happening in any other price band. Last year, active listings, this red line, active listings dropped under 700 all the way through May. This year, they've been increasing since January. Guys, this is the most powerful chart that I have seen for Nashville. And I believe, again, that this is happening nationwide, but you've got to pair out the price bands. We have a very interest rate sensitive group, the under 700,000, which is, guys, that's like 1.5 times the median price, right? This is the majority of houses that sell are in this price band. And yet we are seeing for the first time in a couple years, active listings increase in this price band during this time frame. Right? It happened in 22 and then it just parabolically took off. It's happening in 24. It's not really parabolically taking off, but it's definitely something to watch. Like, will it continue to increase in increasing increases? Like, we're going to be watching for that. Right now, it's pretty linear. And certainly with 7.3 mortgage rate, like, what's going to happen? You know, our mortgage rate, which by the way, here's my PSA, guys, mortgage rate hit 7.37 this week. It was another year-to-date high. Guys, this brings us back all the way to the end of November. We saw 7.3. But guys, look, it's in an uptrend right now. Who knows? Will it keep going up? Very possible. Will it go down? It's very possible. Now, I personally think the risk is to the upside. The fact is, guys, nobody knows where interest rates are going. You need to be careful. Janet Yellen doesn't know. Jerome Powell doesn't know. They can manipulate the rates, and they still don't know where they're going. So guys, be very careful when you hear those people say, oh, buy the rate, buy it now, and you can just refi when it drops. Guys, I'll tell you another thing. If rates drop rapidly, it's very possible we're in a recession, and that also would not be good because chances are if rates are dropping rapidly, your home value could be dropping rapidly. It's a huge win. If you can refinance and rates drop, it's a huge win. Don't get me wrong. And it is possible, right? But it's gambling to assume that you just don't do that if you can't afford the rate that you got. Above $1 million, you can see it's still expanding. And guys, this is 1 to 2 million. So this is pretty powerful that it's still expanding. And then above 2 million, I've been tracking that now, right? Even though active listings have been accumulating, they're accumulating at the same time that contract volume has been accumulating in these areas. Look at contract volume. Now, that being said, there are places where $1 million houses are extremely soft. We put an offer on a townhouse this week. It was listed for 1.5. We offered 1.1. Okay. Now, we weren't trying to be mean. The seller was a little bit offended, but the truth is like there was an 18-month supply in that neighborhood, 18-month supply, and supply has grown by 50%. Just because we can look at active listings and see that they're up year over year, it could be a healthy market, and generally it is healthy, but there are pockets of this that are just heavy supply and no demand. So that's why it's hyper local right now, guys. It really is hyper local. Just to give you an idea of how hot this market is in some ways, there is an increase in properties going under contract with days on market at 0. You can see here we're year over year up. We're at 253. Last year at this time, we're at 219. That's almost a 15% increase in houses that are going under contract with 0 days on market. Buyers are still fighting for houses, guys. These active listings have to continue to accumulate if this is going to change. But right now, buyers are still fighting for houses at a greater pace than they were last year, at a greater pace. Now, let me play a clip from my broker because I just think this is the craziest story.
Yesterday, my client calls me and says, hey, 2 days ago, you sent me a house that I'd really like to go see. I said, no problem. Let's go see it today. She says, great. I called the agent. The agent goes, look, we already have 2 offers, almost no contingencies. They're asking $2.3 million, and I think we're just going to take one of those. So no, we're not going to take any more showings. $2.3 million, multiple offers, over asking, 0 contingencies. This sounds about 2 years ago, doesn't it?
Yeah. I mean, here, $2 million. I mean, and believe me, guys, I had $1 million buyer in Williamson County who's been, we've watched the market just heat up in the past couple of weeks. So I'm not here to tell you that somehow listings exploding is softening the market right now. It's not. Okay. We need listings to continue to accumulate for the next several months to really see softness in the market. And believe me, if we start seeing softness in the market, I'll be the first to tell you about it. But right now, it's not there yet. It's not there yet. In fact, even that neighborhood I was telling you about, my buddy texted me and he said, hey, that house you asked me about, they've already got 6 showings scheduled and it hadn't even been listed yet. 6 showings scheduled. So look, this market is hot. Buyers are still fighting for quality houses at a higher rate than they were last year. And the quality of listings and the type of listings that are out there, even though we're seeing an increase in active listings, they're not in the areas that are needed yet. But I'm very, very excited to see active listings in this lower price band really start building, guys. They start accumulating. We could have a whole shift in our experience for both buyers and sellers this year. Now, and to be honest with you, if it accumulates fast enough and we get interest rates at a place, I mean, we could see some pretty significant price drops. Now, I'm not saying that'll happen. I promise you, I'll tell you that'll happen. I'm no longer forecasting prices out more than 30 days. I can tell you where they're going to be in 30 days, but outside of that, I'm not going to forecast that. I do believe that for April, we will see a all-time median price high. And I do believe a lot of it is due to the mix and not necessarily home value increases. But that being said, we are seeing prices increase in neighborhoods. In fact, this neighborhood, we helped a buyer. If you look at where it went for Q1 median price at $275 broke a 2023 record. And now you're back to 2022 prices here. Even though the upper band isn't as high, there may not just be the volume there, but you can see both the lower quartile and the median for this neighborhood. It's Forest Crossing right off of Royal Oak. You can see that neighborhoods like this are going up in value right now. This is another example. In fact, this is including that neighborhood I was just talking about, you can see the median price is moving up and could eventually hit the all-time high, which was in Q2, 291. It still hasn't broken through that yet, but you can see the trend is up. Prices are trending up right now in some of these quote unquote lower price neighborhoods. And these are lower price neighborhoods. Even Lad Park popped up from where it was tanking in Q1, but that's really due to just the low volume that's there. I think Lad Park is still on the struggle bus. And to be honest with you, I'm going to show you one that I think is the absolute best deal in the market. And I don't even know if they would go for this, but I'm just telling you, it's an option. Unfortunately, you do have to have a $400,000 down payment. But this house right here, it has an FHA assumable mortgage. It's got a loan balance of about $400,000. If you could put down the remainder, I mean, you're at $280 a square foot, which for a smaller size house, and believe it or not, this is a little bit smaller than average, but $280 a square foot, $850 a price point, and you could assume the mortgage. Now, there's some logistics and challenges there. You'd have to really sell it to the seller because they are actually priced for a quick sell because they have another home under contract, 8 days on the market. They need to sell this thing. They need to solve their problem. That's a good deal. That's the one I would go for. Obviously, you'd have to talk to the list agent. I mean, I've never talked to the list agent, so you'd have to talk to them. Last thing I want is to bail out the banks by someone picking up a 7% mortgage when they could have a 3%. So anyways, that being said, I hope you guys have a great weekend and we'll see you next Saturday.